The Canadian dollar is paring its recent gains following the election victory for Justin Trudeau's Liberals Party. Now, as expected, this was a very closely fought election campaign between the Liberals and the Conservatives, with Justin Trudeau only managing a minority victory on this occasion. This comes following, of course, the majority victory he secured at the last election, his popularity falling in recent weeks following various controversial events. Now we find ourselves in a situation whereby Trudeau will need to try and negotiate a coalition partnership, probably with the NDP, in order to try and secure those majority seats in Parliament and progress with his legislation, his domestic agenda, one which was actually quite successful in his first term. Now, we saw the Canadian dollar actually rallying into this, and as you can see on the chart here, we came from the highs of around 133.50, 134, and we're now back towards the kind of 130, 130.50 levels. Now, from a technical perspective, this looks like a stereotypical move. We saw a long-term breakout of a long-term upward trend. This was followed by a corrective move back towards the 61.8 fibs before we started to move lower. Now, but this isn't a typical move. Because we saw that 61.8 fib tested on so many occasions, it was looking a little vulnerable for some time, especially when you take into consideration those higher lows that we were seeing in the lead up to them, potentially indicating that the dollar was going to regain its supremacy and we were going to see another move higher here. But this has also coincided with a drop-off in the dollar over the last couple of weeks, aiding this move lower, pulling back off those 61.8 fibs and back now towards these lower levels. The key levels here remain unchanged. 132 to the upside is the initial resistance level. 134, the more significant resistance level above that. A break of that takes out those previous highs, takes out the 61.8 fib, and would at least indicate that we are moving on towards higher and higher levels. The key level to the downside remains that 130, 130.50 zone. That's the most recent level of support. It's also a big psychological level as well, and therefore that adds an element of significance to also it was last time, and so often is if you keep looking back on the charts, these big levels do carry a psychological significance. In terms of where we stand from a political standpoint, it's likely to take a little bit of time for Trudeau to form this partnership. While both parties do sit to the left of politics over in Canada, it doesn't necessarily mean that we are going to see a partnership forming here, but this is going to be the most likely alliance that may take us forward. It's only a question of time at this point. So the Canadian dollar paring gains at this moment in time, but not significantly so, which suggests that this is something that was largely priced into the markets, despite the fact that this was a closely fought election, despite the fact that the Liberals and the Conservatives were neck and neck in their polls, and even despite actually the fact that the Conservatives did win the popular vote, even though they fell well short of the number of seats that was actually achieved by Trudeau's party because of the first past the post system. Now, moving forward, it's not just Canadian politics and Canadian economy which is going to dictate the moves here. We need to keep close eye on that dollar. As I said earlier, the drop-off we've seen in this pair has coincided with a drop-off in the dollar, so we can't underplay the significance of that here. If we continue to see this decline in the dollar, then this could put a lot of pressure on that 130 level. But whenever anyone bets against the dollar, it always does seem to make a return. So this is going to be one to keep a very close eye on. Perhaps the Fed, over the course of the next couple of months, could have a lot to say on this.